into something like this. Everyone logging in. We are recording this, and we post it or send it out if you'd like the information. Thank you to our sponsors. We have 4 sponsors here: Highland, Fifth Third Bank, Skylight Financial Group, to update us, to answer any questions that we might. I know this is different. We're all getting through this together. I think the one thing that I've noticed, and a lot of people have commented on it, is how people are coming together and supporting and helping each other. And that's maybe the silver lining in all of this, is the good that you see in everyone. So how we are going to do today is, I'm sure you all have lots of questions. I know some had sent me some questions prior, which we had passed on. We have experts here to answer, like I said, any questions that we have. And what we're going to do is start with 15 minutes to kind of give a lay of the land in the specific area or discipline. If you have your volume on, if you're not speaking, if you could mute it, that kind of helps that we can all hear. And if you have any questions, we're going to do to create some order. You can use the chat feature. If you don't have the chat feature up on your right-hand side, if you kind of go to the bottom of your screen, you'll see a little chat box. Click on that, and then it'll pop up. We will monitor that and then kind of ask appropriate. We'll make sure all your questions get answered to the best that we can do that. If you do have a question that is a little bit more in-depth and you really kind of need some back and forth, feel free to jump on the video, take your mic off, and then you can ask that directly. So, sound okay? Okay, so we're going to get started. Like I said, I'm going to let the presenters each introduce themselves and tell a little bit about the lay of the land, maybe in their specific discipline area, some things that they've noticed, some things that their clients are maybe struggling with, some important things for us to stay out. And I'm going to start with Tony Pacco of Highland.
Thank you, Angie. Good morning, everyone. Just first and foremost, I being a small business owner myself at one time, just my heart goes out to all of you guys that are struggling right now to keep your employees on board, to keep your businesses running. I recognize that this, to say is brutally difficult, would be the understatement of the year. So there are a lot of wonderful mechanisms out there. Obviously, I didn't say I'm with Highland Insurance, and that seems to be one of the million-dollar questions out there right now, is how does insurance respond to this? And we can certainly get into that topic. I do believe that, as I said, there are many available alternatives to help businesses sustain themselves right now. You got a lot of great experts here today to talk through those things. So please ask any questions. That I won't take it personally if someone's a little bit upset with insurance right now. I know there's a lot swirling around, and it seems that each day brings something different. So look forward to your questions. Look forward to trying to answer them and help you in any way we can.
Okay. Michelle?
Good morning, everyone. Yes, my name is Michelle Willard, and I am a client executive with Highland, and I work specifically in the employee benefits department. So I'm just going to go through a few items here that we have been answering questions from our clients. And I think Angie has just a quick slide. Wanted to present that because there are some websites that may be important for you to be able to utilize during your day as you get questions as well. So just real quickly, the Ohio Department of Insurance related to health plans did provide opportunity for employers to delay their grace period for premium payments up to 60 calendar days. And that's from each original premium due date. Obviously, at some point, there will be a catch up that will need to be done. But at this point, if you need to take advantage of that, I would definitely reach out to your broker or insurance company and ask them for that opportunity to do that. From an employee eligibility standpoint, the insurers are also being requested to not cancel any policies for the employees just due to the fact that they have a decrease in work hours, which most eligibility is related to a 30-hour work week for employees. I also want to remind everyone of the Cobra rights. So if you do have more than 20 employees, as long as one person remains actively employed, employees then may elect Cobra under normal circumstances and processes. However, for employers that employ less than 20 employees, again, as long as one person remains actively employed and enrolled in the plan, eligible employees may also elect coverage under a state continuation for up to 12 months. So if you're interested in learning, again, more about that, please reach out to your provider. I also want to indicate that if you have no active employees remaining under the plan and Cobra is not available, there is a special enrollment period that's being offered. And so those employees who lose coverage could enroll during the special enrollment and going on the federal exchange potentially, and depending on their income, having some sort of premium subsidy. So the last thing we want during this crisis is for someone to lose their health insurance benefits. It's one of the most important things to people right now. So if you have questions, as stated before, so reach out to your professional in that case. Also related to the actual screenings and the coverage for COVID, I did want to put some information here, but also indicate to you that the governor has indicated that insurers must also cover non-network setting reimbursements. So typically you do have an in-network benefit and an out-of-network benefit, and those non-network benefits are being asked to be reimbursed at a publicized rate, and it is being required that the provider provide that publicized rate for the person who may need that service. And then also, once a vaccination is available, the plans are also going to be required to cover that. The Families First Coronavirus Response Act, I just wanted to put a website here for you to refer back to, because it is required as of April 1st to post a notice for your employees in a conspicuous place, as it states there. So that's another required poster that you're going to need to do. And then as far as employee engagement and well-being, I mean, there's a lot of uncertainty out there. So the best thing that you can do right now is really to communicate with your employees on a frequent basis, letting them know what they're doing, you're doing for keeping them safe, and also about their insurance benefits and how that's going to work into the future. And we would say, especially the well-being part of it. So if you do have an employee assistance plan, or an EAP as they're sometimes called, we are seeing a spike in that utilization. So people are needing to talk with individual professionals about how they're feeling and where they're at right now and the state of uncertainty. I would also just, as I put there, our Highland Coronavirus Resource Center, please look out there when you get a chance. We have a lot of information that's being updated on a very frequent basis. So if we can't answer your question here today, please look out there for additional information as we learn it and hear it, and as it changes throughout this process. I just want to say thank you again to everybody for attending today, and stay well.
Okay, thank you, Michelle. Alex Gerken with Fifth Third Bank.
I was second, but I'm happy to present, and I just also want to echo Tony's early comments. Angie, can you hear me okay?
Yep.
Okay, perfect. I just want to make sure. I want to echo Tony's comments about how we feel for small and medium-sized businesses here as we're working through this. So imagine on Friday, someone comes into your business and tells you that later that day they're going to announce a new product, and maybe on Monday even, and that about all of your customers will be interested in it. More like 90 to 95% will actually qualify for it, and the whole world is going to see it on Friday for the first time. You start asking yourself questions. What exactly is it? How do I apply for it? What are the catches? What am I missing? Who qualifies for it? How do you calculate, the size of the facility? Well, that's about exactly where me and most of our banking peers are as we sit here today. In fact, from Friday at lunchtime till about 4 o'clock yesterday, the bank received over 100 inbound inquiries on exactly what are these new SBA loan requirements and how do we qualify for them. So I'm not going to go through necessarily all the qualifications for that. What I would like to just talk about a little bit is some of the things maybe that you should look out for. We're getting a lot of questions on when is the money going to run out. Obviously, no one really knows that. We expect it to be highly requested and applied for just throughout the country, and specifically in Northwest Ohio. But I thought I would just share with you some of the things that I'm hearing that you may not be hearing. And then obviously leave a lot of time and room for questions, because I'm sure there are a lot of them. I know that there are many forums. You may hear my dog here, he's getting up to stretch. There are many forums out there available in terms of, specifically how to calculate your, 2 months payroll and all those sorts of things. But I'm going to focus specifically on the payroll protection program. What we do know is that as of yesterday, from the Consumer Bankers Association, there are a lot of banks out there that are making worksheets, sending them out to small businesses, submitting them, and actually having the clients fill them out. And then they're being submitted back to the bank, and they're being told that's all that you're going to need to do to submit the application. And I'm here to tell you that based on feedback from the Consumer Bankers Association yesterday, I can't imagine there's a bank out there that's got an application ready. They certainly may be sending you a list of things you need to put together to prepare for the request, but there will be further documentation and an official application as we go forward. So, and the reason for most of that is if you read the actual bill, which I think someone here from Eastern Smith spent the time to read all 800 pages, the feds have about 30 days to come up with all the rules and the official rules and regulations for these loan facilities. So we don't even know exactly what rules we're playing by yet. We have the guideposts and the sidelines out there, but there's a lot of room left on the field for interpretation. And I think we're all trying to walk before we run with regards to what the actual requirements are going to be. What else do I want to talk about? There really isn't an application available that has credibility yet. And again, it's because we still don't know all the things that are going to be built into the bill. We know one thing: all banks that I've talked to are taking client requests regularly. Again, we took over 100 yesterday in basically 4 or 5 business hours. We expect much more than that. Ultimately, if you have less than 500 employees, you probably qualify for some sort of relief. And I'm sure you've seen, if you've looked on the website, you can search payment protection plan through the SBA. You'll get about 30 million available searches, depending on how you search for it. Ultimately, if you're a 501c3 or a business, a privately held business with under 500 employees, you probably qualify. I would caution you on the qualifications. If you follow the math, you can apply for, you can gather your payroll, apply for ultimately 2.5 times your monthly payroll. However, only 8 weeks of your actual payments following receipt of the loan will qualify for forgiveness. So there is a gap in there of what you will qualify for and what can actually be forgiven. So one thing we generally try to caution people on is just because you should or can, apply for and qualify for it doesn't necessarily mean you should, from a business perspective, take on that debt. debt. So be careful. We're just telling people, as you look at this, be careful. Again, can you? Yes. Should you? That's a separate question. So the other thing I'm hearing is that most banks are focusing on their existing clients as it relates to this request. Again, I think because of the volume of the requests that are anticipated over the next several weeks. So I would encourage you to work with your historical bank relationships and your historical lenders versus shopping this around to 3 or 4 different banks. And the reason I say that is every business will only be allowed one application at the end of the day. And as they're The SBA will issue authorization numbers like they normally do, but the Payment Protection Program is a direct loan from your bank guaranteed by the federal government. So again, there goes my dog. So again, we're challenging folks to gather the information, start collecting your payroll information, start collecting your benefits information, because some of your employee benefits information will also qualify. Your monthly lease and rent payments will also qualify, along with some loan interest. So again, we don't know all the rule information. And a lot of this, we expect to have more information by the end of this week. I wish this call was tomorrow morning. I actually have a meeting at noon today with across the bank, or to talk with the folks inside Fifth Third who are going to be administering this program. So we'll hopefully have a lot more details following that meeting today at lunchtime. But we did want to at least make ourselves available for questions today. And just share some of that early information that we're getting. And again, we found out about this on Friday, like most of you did, and we're just waiting for the rest of the rules and some of the other things to be interpreted before we roll this out. So with that, Angie, I'll kind of kick it back to you and pause for questions later.
Thank you, Alex. And if you do have more information and you want to get that to us, we can disseminate it to the group if you think that would be helpful after your meeting tomorrow. So. Next is Michael Nussbaum with Skylight Financial Group.
Hello, everybody. Glad to be here today. Obviously, just want to touch a little bit on these the investment markets. Over the last 6 weeks, we've seen an extreme amount of volatility. What I've been talking to my clients about is staying the course. My advice to everybody out there is really communicate with your advisor. Make sure that your goals, your risk tolerance, everything is in check. This has been extreme volatility in a short window, and it's scary. It is definitely something that we have not seen before. I've had clients say, "Why is this happening?" Well, we know why it's happening. This is it's not a financial situation; it's a medical situation that has really made these markets so volatile. We had a long run since 2008 in terms of really a bull market. So, the last, bear market we had is in 2008, which we had a huge drop of about 38% on the S&P 500. Obviously, that was a financial situation. This is a different situation, but again, my advice is really be in touch with your advisor, communicate. Remember that, most people that are investing in their 401ks or their IRAs, it's a long-term investment plan. So stick with your plan and make sure that you're still on track for your goals. You don't want to see panic selling. People are, again, it's a scary time, but you have to look at the long-term view. And I think if people look at the long-term view and they look at historical data, it always makes sense to stay invested. Going back to the Depression, we've had periods of these declines where we've had substantial declines, but the market does come back. It may take a year, it may take 2 years, but it eventually will come back. And you just want to make sure that whoever you're working with, that you're communicating with, staying in touch with, making sure that you're invested based on your risk tolerance. And that's what the thing is. Just communicate with whoever you're working with in terms of your investment portfolio, your retirement plan. If you have 401ks, do work, reach out to your advisors, and they'll be more than happy to help you. This is what they're there for. And I think that's really the best thing you can do is just stay in touch, make sure that you're on track for your goals, and try not to look at the TV every day. I mean, it's hard not to, but I think again, if you take this has only been going on 6 weeks. Most people's investment horizon is years, not weeks. And I think sometimes what happens is people look at CNBC or whatever they're watching, and they see the 4 or 5% swings. But again, you can't focus on the short term. You got to have a long-term perspective. And I think if you have a long-term perspective, and you look at history, you know this will pass, and you have to stay the course. So that's my advice. Reach out to whoever you're working with, and that's the best advice that I can give. So thank you.
Thank you, Michael. Next, Gary Harden with Eastman and Smith.
Good morning, everyone. I am the chair of the tax practice at Eastman and Smith, also business transactions and mergers and acquisitions. So as you can imagine, we've been pretty busy. And Congress has been pretty busy here too. So there isn't just the CARES Act that we've been mentioning here. There's also the Families First Act that has a longer name that I won't go into, and a lot of executive orders and other ancillary legislation that's come down. There's a lot to swallow. On the CARES Act alone, we're talking about an expenditure of $2 trillion, and that's a conservative estimate. If you could imagine $2 trillion, it's like if you had 2 trillion male cows, that would be, well, that's too terrible to think of. So we'll move on. Terrible, that was an awful joke, I'm sorry. So the point to it is that the IRS has to administer all of this. And many of these changes, like Congress has often been doing, are written into the tax code. So the tax code is going to need regulations, it's going to need rules just in order to be able to administer this. And just like everybody else, the IRS is furloughed. So more than half of their employees are at home like we are, and they can't work remotely. So there's only about half of them that can work remotely. So big sections of the government are already shut down and are supposed to be administering this along with the SBA. And so while Congress can say 30 days for rules and regulations for SBA and tell the IRS that you have to issue refund checks for a variety of reasons very quickly, there's only so much that these people can do in a short period of time. So we're going to have to be tolerant of the timeline here and understand that this is kind of being pushed very hard. It's an absolute vital piece of legislation, pieces of it, and getting the money in businesses' hands. It's absolutely critical, but there is only so hard that you can push these people. I'm going to survey some areas that I've been spending time in already and give you a perspective on some other things. So we talked, we've sent a lot of information out early to our clients. And by the way, if you're looking for summaries of various provisions, you can go to the Eastman and Smith website. We have a lot of good articles. This evening we have another free webinar at 3:30. You can get information on that, I think, from our website. And that'll be on the tax and business provisions and other ancillary issues. And then the employment law things will be covered on Thursday at the same time, 3:30. Tax extensions have generally been provided for payment and filing. Now, for the federal government, that generally covers income tax, self-employment tax, and estimated tax payments. Everything that was due April the 15th has been pushed to July the 15th. Interestingly, not the estimated payment for June, although some states have already pushed that one. So you have to take a look to see if you've gotten an extension. There are other ancillary things like the FBAR filing that got pushed as well. There's certain repatriation provisions that push that too. But if you're not named in that, the only thing that you can do is really file for the typical extension provisions. And if you have to pay tax, come up with a good faith estimate and try to get in what you can. It's possible that what you'll end up with is an extension that hits later on, because of course all the state legislatures as well as the federal government is back at home on furlough. On state governments, what we've run into is some states have passed legislation, like Ohio did. It passed Bill 197, and the governor signed it, and then everybody went home. It extends all of the income tax. It also extends a variety of other flow-through taxes and things. So Ohio should be good on most of those. The commissioner has authority to extend the tax payments in May the 11th. They haven't yet, but they have the power to do that, and I would expect that they would. Michigan issued an executive order after their legislature went home to cover all state and city tax filings and pushed those to July the 15th. But again, you have to take a look at the individual state to determine what they have, and if not, you do the same thing. Now, interestingly, most states will provide that if you've actually filed a federal extension, that counts as an extension for the state. So now that you're not filing extensions for the federal government, how do you extend the state? My advice, our advice to you is go ahead and send to the IRS the federal extension anyway, because that process is already set up, so that you'll have it on file. You can send it to the state, you'll avoid late filing penalties. Again, payment has its own track record. The biggest number of questions that I've received and that we've been trying to deal with is, what do I do with my employees? In other words, what benefit plans do I take? Do I put them all on unemployment? Do I keep people on? Who do I keep on? And how do I calculate my way through this mess? Well, at a very high level, and this takes actually quite a lot of work, you have to start from looking at, are you going to put them on unemployment? Now, the unemployment package is a pretty good one. The federal government funded it with $1 billion with the federal and with the through the state unemployment benefits programs. The Families First bill provided for that funding. CARES Act came in, and in addition to immediate full qualification for unemployment, they're adding $600 a week to every employee federally funded. Well, that sounds good, but now the state and the federal government have to work out all the administrative details. And so I've had clients are calling and they're saying, when are these $600 amounts going to be coming? And the state administrative offices have things posted on their website. They say, don't call us or leave messages. It's going to slow us down. We're working on it now. So they will get it to us as soon as they can. Now, what else can you do? Can an employer actually pay additional money to people while they are on furlough and then on leave status? And the answer to that is layoff status. The answer to that is, well, a strong maybe. Here's what happens. If you pay them wages like a bonus, of course, it's subject to withholding, et cetera, and it affects wages for purposes of some of these other tests that kind of complicate things. There is an opportunity to make payments for supplemental unemployment benefits. Now, these plans are usually established through collective bargaining. Very few, if any, employers actually do this outside of that. They're usually put into a trust, a tax-exempt trust. You don't have to. It isn't that complicated. In fact, there are rulings on the subject. The problem in the state of Ohio is that if you don't file and get approval for your state in advance from the Ohio Family Jobs Department, what you end up with is the potential for the state taking the employer payments and applying that against the payments of unemployment that they've received from the government. The way around that is to get one of these plans in place where the payments are for not being employed and it's not related to service, but you have to file with the state of Ohio. With a handful of other attorneys at Eastman, we've pulled together a prototype plan, and we're trying to get it through the Lieutenant Governor's office for purposes of adopting that and allowing all the employers to be able to do this. We've had several want to do more for their employees, but they get caught in this conundrum where the more money they pay to the government, the less unemployment payments that their clients are going to, that their employees are going to get. So hopefully we can resolve that. Michigan does not have such a filing requirement. So again, we have a prototype plan. We'd be happy to work through it with you. I will have an article on our website sometime today, hopefully, which will go through some of that. Beyond that, then the question is, can you keep your employees on the payroll? Let's say they can't be in the office, they can't be at work, but can you keep them on the payroll? And if you do that, the government is going to support you as an employer in that process. Here's the trick. You can only use their wages in measuring some of these benefits once. So there are a couple of really neat payroll tax credit programs that are out there. They came through the first bill, the Families First bill, and the first one is an emergency paid sick leave credit, which is up to 80 hours of paid sick leave, and that only applies if you have 500 or fewer employees. It's $511 a day of credit that the employer can take for a full-time employee, $200 for staying at home and caring for someone in the family that's sick or children, etc. So that's there. if you can not qualify for that, the CARES Act came in with a second credit, and it's an employee retention credit, and you can use wages of up to $10,000 per quarter on that one, and you can get a credit for 50% of the qualified wages. So the maximum credit for Gary's simple math is $5,000 per employee, but that's more money than otherwise, and so it's not a bad gig. Now here's the trick. How do you get this money? Well, you have to actually file Form 941. IRS issued a notice that with the Department of Labor and said, just take credit for these payments on Form 941 at the end of the quarter, and you'll be good. So you can keep all of the withholding to the full extent of the money on the withholding. So let's say you have income tax withholding from the employees, all of them, not just the ones who are on the credit or at home, but everybody. You can take credit for all of the Social Security and Medicare taxes as well. If you run out of money there, you can get a quick refund on the emergency paid sick leave provisions, but you cannot necessarily do that for any extra amount for the ERC credit. That one you end up having to a cap on wages where you add up all of the wages that were to all of the employment taxes for the quarter, and you can't exceed the amounts. It's 100% of the payroll. Now, to further complicate that, you cannot qualify for both the credits and some of these loan provisions using the same wages. And what was already mentioned to you is this absolutely fabulous loan program. It's called the Payroll Protection Plan. The problem with that is that, again, if you use the credits for these employment taxes, then you cannot access the loan. So you have to make a decision to see what works best for you. That money can be used to cover payroll costs, employee salaries, mortgage payments, rent payments, utilities. There's a variety of specific things that you can qualify for. It is a forgivable loan, meaning that it can turn into something that resembles a grant. But the key to that is that you have to pass all the qualifications, which again, if you read the statute, it looks like you should be able to do that. Problem with that is that there are enough ambiguities and regulations and rules that need to be adopted, and so it's possible that they won't be forgiven if you don't document properly. So again, these are things that we have to work through with you. There are retroactive changes to the Internal Revenue Code for which you need to get an amended return on file with the IRS in order to act these. If you can imagine the IRS being overburdened by they're going to be processing a lot of amended returns. Many of these amendments go back to the Tax Cuts and Jobs Act, which was effective 1/1/18, meaning that filing amended returns for 2018, also people are filing 2019 returns now. So you need to get with your accountants and figure out which of these you might qualify for, and instead of having to do an amended return, simply go ahead and put it right the first time.
Gary,
So, yeah.
On the you can see it, but is the payroll protection program, is it tied to the head count from March 2019? Is that correct?
So we have measurements that go back to 2019 and compare to what's happening this year. So the answer to it is that yes, there is a period of time that you look at in 2019, and you compare it to also the period at the beginning of this year. Scott Johnson is going to talk about the loan provisions a little bit here, so I'm going to defer to him and hopefully get into that a little bit more detail. Okay.
So pass over a few more questions, but if Scott could introduce yourself. And reading that question then, so if your head count, Scott, had changed out of luck with this?
First of all, my name's Scott Johnson. I'm an attorney with Eastman & Smith. I'm in our business section, and I'm the chair of our real estate practice group. Appreciate everybody participating in the webinar this morning. Just to echo some of the comments that our other panelists have stated, you know, we're all feeling the effect of this, some more than others. And, you know, I think it's important for us all to just pay attention and try to stick together and try to work with one another. What I was really planning to talk about was some issues with commercial contracts and things that you might be seeing, dealing with, and how we can address those. But I'm happy to talk about some of these loan programs. There's a mechanism that is set forth in the CARES Act for a reduction in your forgiveness. So Alex mentioned that the maximum amount of the loan that you can get is going to be 2.5 times the payroll that you had for a month on average during the preceding time period, and then you can get a forgiveness for an 8-week period from the date that you get the loan for loan funds that you use for allowable expenses, including payroll, mortgage, interest, rent, and utilities. That amount of forgiveness is going to be reduced. And there's a mechanism for that, but it's based on a reduction in payroll. It's also based on a reduction in wages. However, if you eliminate those reductions by June 30th of this year, then you're not going to realize any of those reductions. The calculation for the reductions in workforce is based on your average number of employees from February the 15th of this year to April the 26th of this year, divided by, and this is an either or, you can choose which of these time periods you're going to use for the number that you divide that by. But it's either the average number of employees that you had during the same time period in 2019, or the average number of employees that you had from January 1st of 2020 through February 29th of 2020. So that's kind of how that is going to play out as far as how much of a forgiveness you're going to be entitled to receive. I don't know if that answers the question, but I'll just real quick go over some of the things that I was going to talk about with these commercial contracts. You know, I know a lot of people are feeling a pinch here, being able to pay their rent, pay their mortgage. There's a lot of contracts that just can't be performed as a result of businesses being shut down, the stay-in-place orders that have been issued by various jurisdictions. And so, you know, we have been kind of thinking about that and looking at some of the legal arguments and defenses. And I guess the first thing for all of you that are dealing with anything like this is you've got to look at the language and the terms of your contract. A lot of contracts are going to have a provision in them called a force majeure clause, and that generally is going to state that performance of the contract can be excused under certain circumstances. We've seen those clauses include language that would cover the types of situations that we're currently dealing with. Unfortunately, a lot of them don't. And those types of clauses are strictly construed by courts if we ever got into a dispute. But, you know, what we're seeing is, you know, a lot of people understand that we're all in this together, and a lot of commercial enterprises are willing to work with one another as a result of the difficulties that people are having to perform. You know, another type of legal defense that you could have to performance under contract would be impossibility. And that would be a situation where, like, for example, Huntington Center canceled a bunch of events. You know, they maybe had a contract with a performer to come into town, and as a result of the governor's order, that said you couldn't have public gatherings of a certain number of people, that contract was just impossible to perform on. So that, that would be an absolute defense if somebody were to try to hold someone's feet to the fire and say, hey, you breached this contract because you didn't perform. Like, you couldn't do it because the governor just ordered everything to shut down. So, there are other things to look at. I know that, and Alex could probably speak to this, I know that a lot of lenders are willing to work with their borrowers right now. And it's my understanding that most lenders are just agreeing to some kind of a deferral on either obligations to pay principal and just go to interest only, or principal and interest for a time period. I know that part of the CARES Act, if you've got an SBA loan existing right now, I know there's been a lot of talk about these payroll protection loans, and then there's also these economic injury disaster loan provisions that are in that CARES Act. But there's a provision that states if you have an existing SBA loan, you will automatically be able to get a 6-month deferral on your payment for those required debt service. And there's also a provision where the SBA will actually pay 6 months of your debt service on that SBA loan for you. So those are for existing SBA loans, which I suspect that some of you may have. So that's something to look into. I know that as far as foreclosure or for leases, there's been a lot of talk about moratorium on foreclosures during this crisis, a lot of talk about moratorium on evictions during this crisis. I know that there's a bill pending in the Ohio State House that would impose that moratorium. The CARES Act did impose a moratorium on certain foreclosures, depending on the type of loan product. So, we're all in this together, and people just have to keep level heads and hopefully try to work one another so we can get through this. And if not, take a look at your contracts, and there could be some legal defenses and legal remedies available for you.
Okay, great. Let's open it up to questions. And we have a wonderful panel of experts. If you have any questions, like I said, use the chat feature, or if it's a more detailed question, if someone wants to kind of pop out and say something. Okay. I'm scrolling through here. I do have one. Were all deferred taxes, will they be due by July, or will they stagger them?
There, I was struggling with unmute. So the answer to that is that income taxes, all these things are due July the 15th. State and federal are due taxes, so it depends upon the other kinds of taxes involved. Tax is certainly due in we don't done. So I guess the answer to this is the taxes right now are all going to be due to be paid July the 15th. Notwithstanding that, there's been talk at the federal level of potentially pushing all of this to October or even the end of the year, depending upon what happens. So what's going to happen? What can happen is service centers closed down. We've already had 2, Philly and Fresno have closed down completely, and all of them have gone home. If we have any more closed down, the government won't be able to process tax returns as they come in, because even though you may be e-filing, somebody still needs to handle all the technology. If that process closes down, where all these the remaining returns are being filed, we will likely end up having another push to later in the year. So again, my advice is file your returns now, if you can, unless of course you've got one of these provisions that might end up causing you to file an amended return for for 2019. I didn't go through those, but real quickly, that would be qualified improvement property. The large corporations, their net operating loss carrybacks are back in place. If you're a non-corporate, a flow-through entity, there was a cap on business losses. You can take the full amount for 18, 19, and 20. The business interest limitation has been increased substantially, and there's also a credit for alternative minimum tax that comes in place. So for those people who qualify for those particular benefits, you ought to hold back on filing returns. Everybody else, get them in place, even though you might not be able to pay them. At least you know what your nut is, and you can figure out when and how the money is coming.
Okay. How does eligibility work for a 1099 employee whose income is significantly reduced or goes to zero under CARES? And then another question along the same lines is, can a business owner file for unemployment?
The unemployment questions. I can tell you that under CARES and the tax credits and these loans, you can qualify as self-employed. So that does work. The rules are adjusted, but it definitely works. There are also deferrals on having to pay employment taxes. So for example, if you have employees, or even it's your own self-employment tax, if you can't afford to pay that, those taxes have actually been pushed out 2 years in installments. So you have for the deposit of employees' taxes, you have until the end of 2021 to pay those deposits. And we're talking here not of the employee's part, I'm sorry, this is of the employer's part only. And then out until the end of the following year, 2022, for that. With respect to self-employed, it's the same concept with 25% and 25%. Again, we're talking about the employer's part. There's a lot of payment deferral provisions in here, some of which apply to the self-employed, as well as the folks who are employees.
So, little plug for the next webinar that the UT Business Center has scheduled, but I think that they'll be addressing a lot of those employment type issues at that webinar.
Mm-hmm. Yeah, okay, now that we are having another one Thursday morning at 8:30 that we will talk about employment, leadership, managing remotely, and that pivot right there. Okay, a few others. So many business owners have BI coverage, but most of the time virus or bacteria pandemics are excluded. We've heard multiple times over the last few days to submit claims regardless of the exclusions because they may change. Is this the right way to go? And would this be considered a claim based on a government authority impact on the business?
Yeah, so that's a great question, Angie. I'm glad it came up. So the way we are handling this with our thousands and thousands of clients is that each individual contract with the insurers are unique and have different language and different wording. It is worth sitting down with your broker, whoever that may be, and going through the language and really understanding what's in that contract. They are not all the same. However, with that being said, the insurance industry, the carriers were not designed to compensate for this type of monetary loss. And just to give you an example, we're in a very hard insurance market right now, which means that most insurers are, before this event, were losing or breaking even at best on their overall, what we call their combined ratio, money being paid out to money coming in for premiums. So you look at the large losses that have been paid, and that's why you've seen your property insurance going up. In some cases, even before this event, we had clients seeing 100, 200, 300% premium increases in their property insurance. So you take this event, which even some of the information coming out this morning was, if the insurance industry were to pay out claims for this for businesses of 100 people or less, they would be, for business interruption for this event, they would be paying out over $300 billion a month. Just to put that in perspective, that's 100 people or less, across the country, the insurance industry in totality has about $800 billion of cash reserves, and that's designed for your auto losses, your property losses, your casualty losses, anything involved in normal insurance. So to be very clear, the coverage that is out there is not designed to cover this. There was not premiums collected for, and that's typically what you'll see the insurance carriers take as their position. However, I will say it again, that one of the things we've done in terms of the question of do I report the claim is we've asked all the carriers we work with, and that's over 120 carriers, to waive reporting provisions so businesses don't feel they have to report a loss today or tomorrow, and they won't get caught in some technicality that a loss wasn't reported in time. And what we've seen is the Ohio Department of Insurance has pushed back 60 days to say, look, we understand that businesses are under undue stress and they don't have to report claims today. So the question becomes, if I do report it, do I have a placeholder? The answer would be most likely yes. And then what happens, right? If the claim is denied by the insurer, where does it go from there? And you obviously always have the option to litigate. You always have the option to go back to the insurer and push harder. However, once again, I would go back to the argument of these insurers would go bankrupt within a week if they had to pay these claims out. So with that being said, and it just came out this morning from CIAB, which is the big lobbyist group for insurance brokers, that there will be continual pressure on the government to provide funding sources for businesses to facilitate business interruption claims. I would see a federal backstop coming where, similar to the CARES Act, that businesses will submit claims directly to the federal government based on business lost due to this virus shutdown, and be reimbursed at some level, whether that be 50, 70, or 100% down the road. My experience tells me, everyone I've talked to tells me that it's very unlikely to see the insurers capitulate and pay out these claims. So the short answer is, if you want to make a claim, absolutely your broker is going to advocate for you and allow you to make that claim. In terms of civil authority, once again, civil authority, and maybe I left that out, civil authority deals specifically with a loss event that the government then says certain areas are shut down due to that physical loss. So a tornado, an earthquake, a large fire. The big issue here is that there was no specific physical loss to businesses. Now, once again, there is the gray area. You can make the argument that if the virus was in your factory, it is therefore in effect damaging your property and allowing you not to operate. So absolutely, if you want to make the claim, but I do think there's going to be relief coming from the federal government to address the business interruption issues that these businesses are having.
Thank you. Let's see. This is a clarification. I think maybe something Scott said. Did we hear that if an employer pays the newly required April 1st sick pay and requesting a credit on the 941, that restricts availability for the SBA 7A PPP loan? What about the credits for the 2/3 of payroll costs on EFMLA? The 2/3 of payroll costs. You got that?
Yeah, I've got that. That was what I had said. Yes. So you can use the wages only once. So if you take your credits, you're not going to be able to use the same wages in calculating the amount of money that you can borrow for the payroll protection plan loan. So again, this is just like all the other things that we've mentioned here. There are some catches, and you have to decide what your program is going to be. So really starting from the beginning, trying to figure out who's going to get furloughed, who's going to be put on paid leave, who's just going to be put on unemployment. Are you going to rely on the regular 100% of state plus the $600 that comes down, which for some employees is more money than what they might have been making, before the furlough, right? So for some that might be pretty good. Dropping in a sub plan on that to provide additional money from the employer can also benefit. Otherwise, then you have to choose, all right, so I'm not going to put them on paid leave. You're going to put them on paid leave. You're going to skip the unemployment. Then you have to pick your credits. So for those who are caring for somebody or who are sick, who are quarantined, etc., You can get the one credit under the Families First Act. You can get the second credit, which is the employee retention credit under the CARES Act. But you use those wages for the credits. The government is not going to allow you to have a double benefit for those wages. You only get one benefit. So the purpose of those payroll protection loans are to protect the payroll. It's an alternative to the credits. Said in a different way, you get 2 months and 2.5 months, which means you get 2 months of credit for a loan here, which allows you then to pay it. Now you can't defer those payments. You got to pay the employment taxes on it when they come because the government gave you the money. Then you have another half a month wages that you can use toward things like mortgage payments and rent and utilities and other things that might be on the list. So you have to make a choice.
Okay, so I think that answered another question, but you can let me know that sometimes, yeah, some of the employees are making more money from the stimulus package than they were if they were working. So the question was, what would the advantage be to apply for PPP under the CARES Act if our employees were making more unemployed, which I think you answered, unless you have anything else to say about that.
I'm having difficulty with my mute here. No, I think that's as complete an answer as I can give. I shared an answer on chat here. So we had a question earlier also on how you make claims for self-employed people. We received a joint notice from the Department of Labor and from the IRS between the two acts, right? Between the Families First Act and the CARES Act, and it covered how you apply for certain kinds of credits. And you put that on your 941, but it didn't cover everything, and it didn't cover the self-employment, and it of course didn't cover the provisions of the CARES Act. We're assuming at this point in time that it'll be a similar treatment, but we have all the minions within the government scurrying around trying to figure out what to do and getting this guidance out, and most of them are furloughed and not working. So this is what I shared earlier. It's like the government can say, here it is, and this is how it's going to work, but somebody has to make it work.
And those PPP loans are available for not just and Alex had mentioned this, not just the typical type of business that could previously qualify for an SBA loan, but right now it's any business with 500 or fewer employees, or if there's a different standard for number of employees that was set forth by the SBA, that would provide for a higher number of employees, then that standard would apply. But it also is going to include independent contractors, so your 1099 employees. It's going to include sole proprietorships, and I think Alex had mentioned 501c3s. So your nonprofit organizations are going to qualify for that as well. And the funds that these are used are also going to include of sick leave or FMLA, things like that.
I want to also share something on this subject with everybody. We've had a lot of questions about this. Some businesses are actually doing pretty well in this process because, like us, we're scurrying around and trying to provide for a lot of concerns, and which is of course a good thing. That doesn't mean that people aren't economically impacted, nevertheless, by this virus, by this emergency. But in order to apply for one of these loans, somebody's going to have to sign a certificate saying that they've been, detrimentally affected by this virus and by this emergency. And it's not free money. Just go, because you do actually have to have a need, and you have to certify the need. It is the simplest certification of need that I've ever seen in my career, and it's not backed up by anything other than the SBA, so no guarantees. There's no collateral or anything, but you do have to sign that paper and file it with the government. And so, I caution everybody to make sure that you've got a good purpose and reason for taking out the money.
Hey, Angie, real quick, the other thing I would add is there are some limitations on highly compensated employees. We haven't discussed that yet. So as folks are calculating their monthly payroll, it's important to note that if you have highly compensated employees over $100,000 annually, those calculations are limited to $100,000 for anyone that happens to go over. So again, if you think professional industries, maybe engineering firms, things like that, or other professional agencies, you really have to be careful. It's not just the entire payroll. The folks that make over $100,000 are limited to $100,000 in the calculation. The other thing I might add, like any loan, I would, and I appreciate Gary mentioning it, you really have to consider the need. We've really tried to focus the business conversation over the last 2 weeks around determining what a company's cash flow might look like over the next 13 weeks. A lot of banks refer to it as a 13-week cash flow calculation. It really helps in good times, frankly, and in bad times. It's a tool to be utilized to determine all the business inputs and how it will impact the company's actual cash flow. Financial statements and net income based on GAAP-based financials is one thing, but if you actually follow the cash and utilize one of these 13-week cash flow forecasts, it can really help business owners determine, again, in good times or bad times, what does the actual flow of cash into and out of the business look like over the next 13 weeks? So a lot of folks on our teams are out there talking with companies who are frankly struggling, and then companies who are doing well, just to get a good, almost a quarterly view of what the cash flow looks like. And then that template is updated every week to push it out to another 13 weeks. So it's a great tool. I'd be happy to share that with folks on the call today. But I would just say, as you're leveraging your conversations, because I assume your bankers and CPAs and attorneys are talking to you more regularly than they ever have before, it is definitely a tool that can be used, and I'd be happy to share that with the group. The other thing I would caution is kind of a what if scenario. We like to, as bankers, like to have what if this gets worse? And I'm sure many people on the call are saying, how in the heck could this possibly get worse? But let's just say you put an application in for this, to your payroll. What if it gets worse? To qualify for it, you can't lay off. To qualify for forgiveness, you can't lay somebody off after the fact. That will be, to Gary's point, I think he mentioned a deduction in the forgiveness. Well, what if it gets worse and you have to lay everybody off after you've received the loan funds? Folks are trying to figure out, what does this look like then 12 months from now? Because the guarantee from the SBA, 100% guarantee, is for 12 months. And then it's, I think everyone's trying to figure out what that looks like after that. What if you have to lay off all of your staff after you receive the funds? I think it's important to note or think about that what if scenario. Again, I'm not trying to play negative Nancy here. I think it's a tool that should be utilized to boost payroll over the period. But I would just ask you as business owners to think about that what if scenario and be prepared that at the end of the day, this is a loan. And if you don't meet the forgiveness qualifications, there will be repayment requirements on the back end of these facilities. So again, I would just caution to be careful and play that what if scenario in your mind as a business owner. And I would leverage that 13-week cash flow tool as you go forward, just to figure out what your new normal might look like over the next quarter.
Yeah, just one nuance to that. I agree with everything that was said, except Alex, I'm not going to start calling you Nancy. The question of repayment, though, if you end up not being forgiven because either you've taken out an amount in good faith and it ends up not qualifying, or there are regulations or rules that come down later between here and the moment of forgiveness, and somehow or other you don't qualify, the terms aren't bad. You paid back over 10 years, no greater interest than 4%. All of the payments are deferred until the end of this calendar year. These aren't bad terms, right? Now the SBA guarantee goes down over time as well. There's just a lot of detail on this. This was drafted so people would take advantage of it, expecting, as Alex has said, that this is something that's going to be done and resolved by the middle of July. The government wants to put everybody back to work. We can understand why. Everybody wants to go back to work. So we're expecting that this will happen, and that this isn't going to become another pandemic that goes on for a longer period of time. You know, with the next virus that might come out of China, I guess they've got another hantavirus that's coming along. And so at some point in time, we're just going to have to, you know, deal without government support on these things. So I would take advantage of your benefits that are offered, but I would caution everybody to use wages once, figure out which makes sense to you and your company, and go from there.
I have two more questions here. So if a business owner is thinking about getting out of a lease and doesn't have a force majeure, does frustration of purpose or commercial impracticability apply to all?
Possibly. It's possibly, the answer is possibly. Ohio does not generally favor those as defenses. So impracticability is a difficult argument to make. Impracticability means more than impracticality. So, you know, just anecdotally, there's case law in the state of Ohio, and the situation was there was a 105% cost overrun, and the party was trying to use that as impracticability, evidence of impracticability as a defense for performance under the contract, and the court rejected that. So I guess, you know, maybe a little more facts we would need to have a little more facts about the specific lease terms. What's the remaining length of the lease? What was the purpose for the use of the real estate? Same issue with the frustration of purpose. Depending on how long this goes on, depending on how long the remaining term of your lease is, maybe, probably not, but maybe. You know, frustration of purpose would be more of a situation where you entered into a lease to sell, you know, something that cannabis. You know, if you're in Michigan, you've got a lease for the cannabis type business. It's legal under state law. We've got the Cole report memo in place. The feds aren't pursuing this. Now all of a sudden something changes. The Cole memorandum is rescinded, and feds are going after these types of businesses in states where it's been made legal. You may have a good frustration of purpose argument there to get out of a lease. As far as this situation, we really have to see how this plays out and what the terms of your particular lease are.
Yeah, I'm going to drop in the normal kinds of qualifications that we have to on these kinds of answers, which is, of course, we can't give you legal advice. And in order to receive legal advice, you actually have to sit down with your lawyer and do this. We'd be happy to consult with you later, or you should take, you know, this to your regular attorney, because there's often, you know, one or more facts which could color the decision in one direction or another. So to give you advice, to give you reliable legal services, you have to see your lawyer. So just that caution.
Yeah, thanks, Gary.
Thank you, Gary. There's a question for Michael. So if someone were to have some money to do some investments right now, what type of company should they be looking into?
You know, again, I think it really depends on risk tolerance. You know, obviously, you know, a lot of the financial companies are down, the oil stocks, the airlines. It really depends on the risk tolerance and their time frame, their time horizon, whether they're going to buy individual stocks or they're going to look at buying mutual funds. You know, my advice would be, again, to consult with their advisor and really have a plan for themselves. You know, again, there's to say, hey, I want to go into this sector or this sector. I think you got to look at the big picture. And again, I would sit down, see what your goal is, see what your time horizon is. Is this a long-term, is this money you want to have for the long term, or is this short-term money? So there's a lot of variables in terms of how you want to invest your funds. You know, to say where we're at is are we at the bottom? You know, really nobody knows. There's still a lot of uncertainty in the markets that will play out over the next month or two. But again, I think it's really a situation to say what your goals are and your time horizon and your risk factors. And then I would sit down with your advisor and have him kind of go over the plan with that individual person. So it's my advice.
Thank you. And I think that's all the questions that I had sent to me. Unless,
I see one in the, yeah, I see one in the comments section here, and in regards to the PPP loan, when you calculate payroll and look at forgiveness eligibility, are highly compensated employees capped at the $100,000 limit, or are they excluded completely? That's a good question. And to be honest, the CARES Act is a little it's a little complicated to read through, and I've had disagreements with people that have read it about how this plays out. It's my interpretation that for purposes of determining the amount of a loan that you can qualify for, that individuals' payroll is capped at $100,000. So for calculating how much payroll you can include for your maximum loan amount, we're going to include those highly compensated individuals up to $100,000. For purposes of determining the forgiveness or the reduction in forgiveness amount, I had mentioned that you look at two factors. There's reductions in the amount of employees that you have during specified time periods, but then there's also reduction in wages. So if you reduce people's wages by an amount in excess of 25%, then for that employee, dollar for dollar, there's going to be a reduction in your forgiveness. That does not apply for highly compensated individuals. My interpretation of the act, that reduction in forgiveness would only apply for employees whose salary and wages are $100,000 or less. I don't know, Alex, do you agree with that, or do you have a different interpretation?
Yeah, for what it's worth, Scott gets paid by the hour for his opinion. I do not, but I do agree with the way he described that. I believe it's up to $100,000 is included in the calculation, and then I have not read the backside for the forgiveness qualifications yet. So I'm going to stick with Scott on that one as well. But I do agree on the front end, they're not excluded entirely. They're just limited and capped at $100,000 included in the formula.
Yeah, so this is actually a regular discussion that we're having back and forth with a variety of other professionals. Scott and I have come to this conclusion. There is a separate provision on the definition of wages that does cap at $100,000. I think everybody's in agreement on that. And then it's this awful calculation of how you are forgiven and how the $100,000 employee is treated for those purposes. When I mentioned earlier that these programs for the credits and the loan don't work nicely together and you have to choose, that's because the government is looking at the concept of wages and saying that you can only use wages once. You can't use them a multiple of times, which is a concept that makes sense. And so all these technical provisions are kind of driven by that. And so that's how you end up not being able to use the loan for all or a part of this if you've used all of the wages or part of them for these credits. And so it's an awfully complicated mess here. And we're going to have to work through this just as the government will be. We will need guidance in order to give good answers. There is no question. We're giving you what our best read is on a very complicated piece of legislation, which is the CARES Act, but it also interacts with the previous acts and a bunch of notices that are out there. So stay tuned. We'll continue to provide information on the website, and obviously, we'll be talking to our clients as we put these plans together. And I'm sure Alex's group will be drilling down on it too, and we'll all know a little bit better in a few days, right?
Again, I think it's important to remember this is a brand new loan product, period. And we were told on Friday the same time everyone else heard it. So it is going to take some time to digest. And obviously, from a bank perspective, we want to make sure we get the application and all the nuances of it correct so that we don't impact any eligibility with regards to the forgiveness aspect. That's why folks are so interested in this. So there's a lot more to be learned yet. I'm hopeful that by the end of this week, we'll have some a little bit more direction and maybe an application process put together for everyone. So I know it's really hard to be patient in times like this because there is a drastic need out there, but I do think it is important to remain patient, get all your facts and your figures together and be ready so that when all the financial institutions are ready, which most likely will be about the same time, that it will be a streamlined application and funding process. There are rumors that it'll be same-day funding. I think that's a push by some of the political administrations to get this money out quickly. I'm not 100% confident that it'll be a same-day fund or frankly even funding ready by the end. I'm trying to look at the calendar here. By the end of April, I think is going to be an aggressive timeline, but I think because we're all still waiting on all the rules, and they do have technically 30 days after last Friday to get all the rules and regulations in place. So I doubt that this will be money in hand by the middle of April. There's a chance it could happen, but we're all, like Gary said, we're waiting for all the rules and regulations to hit us as well. And we certainly will have more to share as the days pass here.
So Alex, as people are planning on using these loans, have you given any thought to allowing people to, let's say, apply for loans, but then not want to take a distribution of the loan because as they want to get in the queue so that somehow or other we don't blow through all these billions of dollars in a hurry, and then they're cut out, and then they decide, you know what, I've decided not to take the loan for a variety of reasons. Have you thought through those processes yet?
I haven't been asked that question yet, so I can just tell you off the cuff, I haven't. There is certainly no harm in applying and then not taking the funds that I can think of. It's like any loan. If you apply for it and it's available and you just don't take the funds, there's nothing to forgive. So the only place that may come into play is if you've applied for other SBA loans or plan to in the future. Sometimes having more than one SBA authorization number out there in an annual basis does limit your ability in the future. So I haven't read all 800 pages and we don't have all the rules yet, but that's something to consider in the future for sure. Good question.
So these are also taken into effect for the business interruption loans as well. So that's already been mentioned. There are choices. Once you take out a loan and you go under the plan, which a forgivable loan is a wonderful thing. So I'm not soft selling it at all. It's just that that just as Ellis has said, you're borrowing for a need. You want to cash flow this. You're hoping that the loan will be forgiven. But if it isn't, then you're going to have to pay this. The funds have to be expended by the end of June, as I recall, in order to qualify for the forgiveness. And so, as we push this program forward, we're expecting that these funds will be drawn down and applied to things like not only payroll, but also rent and utilities and other qualifying payments pretty quickly once it comes out.
Scott's putting some statistics out on the chat, and I hesitate to do this because my math isn't always correct, but I have, if you look at the 2018 small business surveys, there were 30 million government classified small business, so under 500 employees. And that number, again, is 30 million companies that employ over 60 million people. So I was playing around with the math last night, trying to figure out, okay, how long will these funds last? The 350 billion sounds like a lot. And if you try to type it into your calculator, a lot of calculators will cut you off. won't let you input that many zeros. But if you just assume a median income of around $50,000, how many employees could be covered by a 2.5 monthly payroll number? And I put a little bit of fluff in there for lease and rent and interest and those sorts of things. It's at an 8-week payroll of $8,500 per employee. You can cover 40 million employees. You know, there's statistics out there. Some folks expect unemployment to hit 30% over the next several months. That is an aggressive figure. So if you, again, try to go through some of that math at a $10,500 weekly payroll, it can cover the $350 billion, can cover about almost 31 million employees. And again, I hate to throw out statistics here, but so it really depends a lot. When is this going to run out? We have no idea. And I would tell you, you know, of those 60 million employees or 30 million businesses, 95 or 98% of them have less than 20 employees. So there are a lot of companies out there that are in the queue or will be in the queue for this. You know, the real trick of this is how large will those payrolls be that folks are looking to get supplemented here. And I will not share my statistics, and I'm not open to audit on those numbers either. I was just trying to get my arms around, you know, how large is this pool of funds, and, you know, how many companies, again, based on averages and medians, how many do I think could be covered for it. So it is certainly, there are a lot of variables that could come into play there. I was just trying to get my arms around some sense of a number.
And remember too, some people are going to apply for the credits, which is going to take them out of the loan. So again, it won't be everybody who applies and qualifies, because they're not going to be able to do a double benefit, and some people won't apply. But hopefully $349 billion will last us long enough. We'll have to see.
Just to piggyback on one of Alex's comments about how quickly the funds will be available. He mentioned some rumors about this being same-day funding. I know that there is a provision in the CARES Act with regard to these economic injury disaster loans, and those loans, they're not forgivable. They do have good terms, and they can be used for the same purposes as the Paycheck Protection Program loans, but they can also be used for expenses that are incurred by a company as a result of material disruptions as a result of this crisis, which that's not something that those PPP loans can be used for. And the Act allows that if you apply for one of those economic injury disaster loans, that even before you're approved for the loan, you can get an advance of $10,000. And if you're denied for the loan, you don't pay that back. And if you get a PPP loan and you've received one of those $10,000 advances, then that $10,000 just gets deducted from the amount of forgiveness that you realize under your PPP loan. And that's also an SBA loan product.
Yeah, I would just mention the difference between those two products. The PPP loan is a direct product that can be applied for by any SBA preferred lender. Fifth Third and most of the regional banks in the area are preferred SBA lenders. The other loan that Scott is referencing is an SBA direct loan, meaning that you have to apply directly with the SBA, not with one of your local lenders. So there's a small difference there that's worth pointing out. Scott, you're on mute if you were trying to say something.
Okay, well, Thank you. I think that that's all the questions that I saw. We are right almost at 10 o'clock. So I just wanted to say I appreciate all of our sponsors. I know things are moving fast, things change daily, hourly, and I appreciate you logging on and helping us understand all of this. It was a few things were mentioned. I know Alex mentioned a cash flow thing. Gary talked about some different articles. We will, if you can get that to us, we'll disseminate that to the people that registered. We also, on our webpage, have a COVID link on there where we are putting all the information that we're getting from our sponsors and from our members. And what else? We have a member list. If anyone lets us know, here's something special that they're doing for other members or in the response, or hey, we're still open, we need some support, we're putting all that online. We'll make sure that we get that link out to you. Again, we are having another one of these Thursday morning at 8:30, more to focus on the HR, managerial leadership topics. We have a few sponsors on that one as well as Dr. Janelle Whitmer, who does a lot with us with leadership development. We will also, when we send us information, we'll ask for feedback. Just as all of you were adjusting to our new normal here. Again, I mentioned earlier, this is our first time doing something like this. Any feedback that you could provide us to maybe make it go smoother, better, any topics that we should be covering. We might talk to our sponsors about doing this weekly or bi-weekly. We're open to anything right now. What we do really well at the center is connecting people together, sharing information. We know a lot of our sponsors are very trusted. They've been with us for a long time. Our members trust them. Our members trust each other. So we're trying to just connect everyone together to make sure that we can share all that information and help each other out. So any feedback you have for us is appreciated. I think we did record this. I think we can put this up online. We will work on that as well and get that link out. So that's it. Thank you, everyone. Good. Everyone.